Good morning, good morning, good morning. Welcome to today's morning blast with myself and Mr. Michael Brown. It is Thursday, the 24th of April, all day. It's Thursday, just for those if wondering. As usual, myself and Michael will be giving you a roundup of the latest market moving trends, news, pricing action, yada, yada, yada. But before we do, I'll crack on with the legals. So, as usual, nothing discussed on this spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ or indeed that of Mr. Michael Brown and myself, Mr. Ryan Paisley. Good morning, my dear friend. How are you?
Very good morning to you, Ryan. Good morning, everyone. I am very well, actually. Back in the office today, which is
Oh,
nice.
makes a
Even if,
change.
well, exactly. Yeah. Apparently, I missed the memo because there's only three of us here at 8:30 on a Thursday morning.
I
But never mind.
was kind of hoping to see you in the. I saw Tom Skinner was in Leadenhall Market having a few St George's Day beers. I was hoping to see you in the background with your gilet, but
Oh, I thought
alas,
you were going to
no.
say in my little white vest that he usually tends to wear, but no one
I'd
wants to
love to
see
see you in
that.
a. I'd love to see you in a white vest and white Reebok trainers, but alas, I
Oh
don't think that's
God,
going to happen.
I don't.
Eh,
I can guarantee that that's not going to happen. Right, shall we crack on?
yeah, why not?
Indeed, let's. Good morning, everybody. Let me find my. Oh, what's this? Oh,
Oh, oh,
no,
oh.
sorry. I've just got very thrown there. I opened up my emails where my notes are, and something called Copilot has popped up. I don't know what that is, but he's disappeared now.
Our technical correspondent
Oh
over there in the
God, is
corner,
that AI? Is that Microsoft?
mate. Remember who you're asking?
God knows. I'm hoping that
I'm,
Tom
I'm
Talks
still, I'm
Cars is
still,
going to
I'm
explain
still
this to us eventually.
I'm still having a long-winded battle with that little paperclip that keeps popping up on the fucking Microsoft Word. It's giving me some
Oh
jip.
God. Deary me. Right. Well, anyway, what I can tell you, with AI or not, is that yesterday was actually another positive day in terms of risk appetite. The second such day in a row, with the S&P 500 adding about 1.75%, and the Nasdaq 100 adding as near as makes no difference, 2.5%. Incidentally, that is the first time the S&P 500 has notched back-to-back gains since the start of the month. Although it is worth bearing in mind that the S&P did end the day quite considerably off the highs, probably about halfway. Half of those intraday gains were paired as the day progressed, and even more interestingly than that, the rally in the S&P stalled right on 5,500 in futures, which is right at the top of the range that we have seen pretty much since the fallout from Liberation Day. So that will please all of the technical analysts out there. In terms of the rationale behind the risk rally that we saw yesterday, really twofold. Firstly, a continuation of the move that we saw towards the back end of Tuesday's session, which was spurred on by remarks from President Trump saying that he had and has no intention of firing Fed Chair Jerome Powell. And then the risk rally was given a little bit more fuel after a whole bunch of sort of softer and conciliatory stories in terms of US China trade tensions. The first of these sources reports coming from the Wall Street Journal, noting that the White House is apparently mulling the potential to unilaterally cut tariffs on China to de escalate the trade war, with the final tariffs likely to settle around the 65% mark. And Reuters sources then followed this up shortly afterwards, saying that the White House would look at lowering tariffs on China pending any talks with Beijing, but that those steps would have to be taken in conjunction with China and would not be taken on a unilateral basis. It is important to recognise as well that we did hear from the Treasury Secretary, Scott Bessent, a little bit later in the day, who followed that up by saying that there has been no unilateral offer from President Trump in order to cut those tariffs on China, and that a full deal with China could take somewhere between 2 and 3 years. And then President Trump himself was speaking after the close last night, and again saying that there could be a deal, there might not be a deal, really kind of not being overly committal either way. But nonetheless, the tone of the United States on balance does appear to be softening somewhat, which is one of the reasons why we saw equities moving higher, and also why we saw a bit of a quote unquote buy America trade coming in, with treasury yields falling across the curve and the dollar trading broadly firmer against most peers, with the dollar index testing 100 to the upside. What I would say, though, is that the Chinese side are not playing ball necessarily. We've heard from the foreign ministry spokesman this morning, a man called Gua. That's News Squawk who've told me how to pronounce that, so any complaints to them, please. Mr. Gua has said that China and the US are not yet in talks on tariffs, that respect is a precondition for any of those talks to happen, and that if the US wants talks to take place, they need to stop threats on tariffs. These comments have then been followed up by the Commerce Ministry, who've basically said exactly the same thing and said that the US needs to show, quote unquote, sincerity if it wants to talk to China about trade. To be completely honest with you, none of this from the Chinese side, at the very least, screams that they are desperate to make a deal very, very
So
quickly.
can I can I
Go on.
just interject here slightly? Just because obviously also it's a lot of headlines that you're reading out for me, which is doing me a great favour, to be honest. So thank you for this. Just one thing to add on this as well. Just one other point. This time from China Customs, which was about 2:40 this morning a.m. London time. They've I've
Oh,
just actually
sorry, I'll
reposted
give
it.
myself a slap on the wrist that I wasn't at the desk for that.
Well, you should be reading it's Zach's overnight news roundup. Let's be honest. But no, China Customs. Further to what you said about China now seem to be the ones playing hardball. They've said that they will no longer supervise goods and articles included in the management of drugs, veterinary drugs, and medical devices. They will no longer supervise import and export of microbiome agents for environmental protection, which sounds very, very dodgy in terms of it just seems like they don't really care what they're exporting anymore. There's going to be no like kind of
Mm.
safety practices put onto this. Now, this is obviously going to, it's already creating fear from suspects, and potentially, rightly placed that, wasn't that long ago that, by all intents and purposes, a certain virus kind of escaped China.
Well,
So we're looking down that barrel again, and this will be something that people start picking up on. I think it's quite interesting just to further this point where we've gone from Trump being the aggressive one of the two, basically saying, right, this is the tariffs you're having, 100 and something percent, 3,000% on solar panels, all of this stuff. China like it or lump it. China haven't like come begging
mm.
like India, like Japan, like South Korea, like the UK, first to pick up the phone. From what we hear, it doesn't sound like China picked up the phone at all. It sounds like the US called China. Um, and it feels like it's backfired a little bit. And now we're seeing Trump's, last night will back potentially China auto parts made in China and cars made in China might not be
Mm.
under tariffs. There's a lot of walking back being done by the Trump administration now, and this obviously times with his conversation. We hear that Walmart and Costco executives were speaking to him and his like inner circle yesterday or the day before, and
Mm.
apparently insider sources have suggested that they've basically told him, there's a 4 week lag between stuff being shipped over from China, and in 4 weeks' time the shelves are going to be bare, which is not a great look for a sitting president who's caused this problem. And it does feel like over the last 24, 48 hours, we've seen the Trump administration and Trump himself in a very kind, well, try not to make it so obvious, but it's pretty fucking obvious, backing down quite considerably. And now China are going, well, hang on a second, you were giving it the big one 48 hours ago. You were telling us to go fuck ourselves. Now I think the shoe's on the other foot. Or sandal, whatever it is they're wearing over there.
Oh
Oh
no.
God. Oh no, I was
Oh.
doing so well.
Oh.
Oh no. Oh, Rich is. I've got HR in a second. But yeah, so I just feel like the worm has turned. Whether or not this has benefits, which I think sounds pretty weird to say, but I believe it potentially does, because China does need the US, right? We do know China needs US trade. Now, the fact that Trump is backing down makes me think that yes, China are going to play hardball to get a bit more ground on kind of proceedings, but I do think this gives an open door for a deal to be met, because Trump isn't going to get the deal he envisaged at the start, or envisioned, sorry. But I do believe this opens the door for a swifter resolution, if that makes any sense. Or I've had a couple of coffees, so it might be talking
I was
bollocks.
going to say, yeah, well, worryingly, you do make sense, which always concerns me.
Oh God, I'm going for a
Yeah,
sit down. I'll be back in a minute.
yeah, you go and sit down. What was I going to say? Yes, I was going to cover the auto tariffs thing. That you've already mentioned that. Fundamentally, just lastly on trade, I mean, it seems at this point, as you said, the Chinese have kind of just gone. We're going to sit here and let you do whatever the hell you want,
Yeah.
and
Well,
you'll come to us eventually. And
what's
for
that
the
is in actual fact, it's from the art of war. It's like when your enemy are making mistakes, don't do anything.
no,
Just keep letting them make mistakes. It's genuinely
exactly.
in the book.
And speaking of arts, the art of the deal at the moment seems to be for just Trump to negotiate with himself,
Well,
because no one's
yeah,
actually speaking to him,
but
and
that's a
all
good
he's
point. So
done is sit there and then
someone,
just fold like a pack of cards.
yeah, someone did make a very good point yesterday. Like he's done some phenomenal deals, but they're against himself.
Yeah,
He's made them with
exactly. Yeah,
himself.
but do you know what? When all of this, when a quote unquote deal is eventually made, it's going to be the best deal ever. It's going to be the
Oh,
biggest win
mate,
that
yeah.
America has
Oh,
ever
yeah.
seen, and
Oh,
it's all going to be because of
absolutely,
Trump.
absolutely. Every other deal has been tiny compared to this deal.
Indeed. Right, moving on from that momentarily,
All
there
right.
are a few other bits and bobs to get through from yesterday. Just Wall Street Journal sources were following up on their Fed reporting. They were noting yesterday that apparently Trump decided not to fire Fed Chair Jerome Powell after concerns were raised by both Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick. Gives you an idea of how utterly terrible an idea it was when even Howard Lutnick is telling you not to do it. We also had Reuters sources yesterday on oil. Several OPEC Plus members reportedly looking to approve another accelerated output increase in June, which will obviously be decided at the meeting in early May. This is one of the reasons why we saw crude barrel lower yesterday, with WTI
Oh
losing
God.
about 2.5%, trading down to $62 a barrel as a result of those sources' stories. What else have we got from yesterday? Well, it was, of course, PMI day. The PMI is pretty grim, to be completely honest with you. In Europe, the manufacturing gauge, that was actually better than expected at 48.7, although I do wonder whether the data is slightly skewed by all of the various front running going on as a result of tariffs. Nevertheless, the Eurozone services metric, that fell back into contractionary territory, and the composite gauge fell to a 4-month low at 50.1. Meanwhile, here in the UK, the PMIs were just horrible. The manufacturing index at a 20-month low of 44. The services index, that unexpectedly fell into contraction at 48.9, while the composite output gauge, that also fell below 50, implying contraction to a 29-month low of 48.2, and some chatter now about whether the BOE go for a 50 basis point cut at their
Oof.
next meeting on the 8th of May. Personally, I think that's a bit of a stretch when you've got inflation on an upward trajectory through Q2 and Q3, but we know that people like Dingra and maybe even Mann are not going to need much encouragement to go down that path again. A couple of other things from me this morning. We had a solid 5-year note auction in the United States yesterday, stopping through the when issued by 1 basis point. And last but by no means least, in the tech sector, Apple and Meta were both hit with fines by EU antitrust regulators yesterday. Apple fined 500 million euros. Meta fined 200 million euros. These are basically as a result of them breaching some sort of complicated EU rules. Not that there's enough of them in the world. The key takeaway, though, is that while those fines sound quite big on paper, they're actually tiny, and they are much, much less than both of those companies had feared the fines they may have been slapped with. So I think both Meta and Apple will be counting themselves lucky that they've got off the hook a little bit
Just
easily with that one.
one point to raise on that though is we do know that Trump fucking hates the EU regulation on US big tech. So
Oh,
even though the fine is less than even though the fines are less than the companies were expecting, don't be shocked if Trump uses this as ammunition to further kind of beat on the over regulation on tech space in the EU, and potentially involve that in kind
oh,
of
well,
tariff negotiations.
he was again saying yesterday how the EU is just ripping off the United States. I mean, I think Trump
I
is
mean,
like
he's got a point to be fair on the tech front. It is a bit,
I think Trump is like the
well,
most ardent Brexiteer out there, to be honest with you.
Yeah, tell me about it. Not far off, not far off. Is that sorry? Is that you done for your part for now?
It is me, Dan, and I've just seen someone fiddling with my desk, so I may have to go and mute myself and have an argument while you're doing this
Okay,
roundup.
right. Well, whilst you're doing that, I'll crack on. As usual, I'll just read out some of the overnight news headlines via Zach, who obviously puts together the wonderful overnight news roundup that goes out on our Substack and also on the Content Hub on our website. Before I do, though, quick shout out to Cam for the Crypto Blast later on today. Obviously, as well, we did our first PIQ on the Block spaces yesterday, where Cam and myself interviewed the awesome Andre from Bitwise. So that will be going up on YouTube once the editing and all that's sorted out. I'm making out there's loads of editing to do. I'm not sure what they do, but I'm just sitting here looking pretty. But just cracking on with some overnight news headlines then whilst Michael sorts out his desk. So on the trade front, Trump said that tariff cuts for China depend on its leadership's behavior and hinted he may announce new rates for China and others within 2 to 3 weeks. Trump also warned that the 25% tariffs on Canadian autos, quote, could go up, while adding he had nice conversations with PM Carney. I don't think anyone's had a nice conversation with PM Carney, so that's the first. The FT reports that Trump plans to exempt some auto parts, as we spoke about just now, including those from China, after lobbying from industry executives. US customs revenues surged 60% in April, hitting at least $15 billion as fresh tariffs took effect. The Commerce Department opened a national security probe into imports of heavy duty trucks and parts, possibly paving the way for new tariffs. So as we've seen a lot of the time over the last couple of weeks, the tariff headlines are very, very messy. You have one that seems positive, and then straight away you have another one that's very negative. President Xi and the PBOC officials there have voiced support for global trade norms and condemned protectionism. Taiwan is reportedly negotiating to buy more US LNG, weapons, and agricultural products to help reduce its trade deficit. Obviously, this ties in nicely with the little article that myself and the AlphaPix lads put together last week, or it might have even been this week. It's all blurring for me. Macro headlines. Trump said he hasn't spoken to Fed Chair Powell, but, quote, might call him, quote, unquote. And repeated his push for lower interest rates. Fed's Hammock said conditions don't justify intervention and reiterated balance sheet runoff will continue. Goldman's Hatzius sees more downside for the dollar, while Barclays said dollar shorts have mostly reset. Strategist Jeffries, Christopher Wood, warned that US equities, treasuries, and the dollar have all passed their peak. China issued its
Just
first round.
sorry, I was
Go on.
just
Go for
on
it, mate.
that. Now
Yeah.
I'm back from my HR issue. The headlines around that are a bit more sensationalist than Chris
Oh,
Wood has actually been making out. He's been making the point for a while now that basically allocations to the US have been massively overweight and they've been massively underweight
oh, so more
elsewhere.
normalization then.
And yeah, and the point he's actually making is not US equities have peaked. The point he's been making is that they have probably peaked relative to other
Yeah, there we go.
markets. So it's
Yeah,
not the S&P is never going up again. It's this era or decade of US outperformance is probably over. That's basically
yeah,
the call that he's made.
yeah. He's saying switch the spread around. Yeah,
Yeah,
instead of being long the spoof, short Euro stocks, he's saying give it a flip around. Not trading advice at all, obviously. But yeah, I get you. Good color there, my friend. Moving on, China issued its first round of special sovereign bonds and ramped up buybacks to cushion the impact of tariffs. Japan is seeing record foreign inflows into both bonds and equities. BOJ watchers now expect slower and shallower rate hikes. The UK retail sentiment dipped amid global volatility, while PM Starmer and von der Leyen are nearing a new post Brexit strategic pact. Ugh.
oh,
Um,
good.
yeah, that was my initial thought as well. A
Right.
little bit of vomit came up then. Australia pledged 1.2 billion Aussie dollars for a critical minerals reserve. The opposition is campaigning on more expansionary fiscal policy. Obviously, we've got elections in the midst in Australia. South Korea's economy contracted in Q1 on weak confidence after wildfires and impeachment-driven political chaos. UBS downgraded Indian equities to neutral amid global portfolio repositioning. Indian energy importers are shifting from LNG to cheaper oil. Geopolitics. Trump said he believes he has a deal with both Putin and Zelensky to end the war in Ukraine. Zelensky previously rejected the US proposal that included recognizing Russian control of Crimea. European officials fear Trump's draft Ukraine accord could undermine NATO unity ahead of June summit. The US is open to a civil nuclear deal with Iran that would allow imported fuel only. That's according to Secretary Rubio. Russia reiterated its rights to use nuclear weapons if faced with aggression from the West. The US is investigating three Chinese telecom giants for potential ties to the Chinese military. No shock there. China and South Korea held maritime talks and agreed to continue managing disputes constructively. Just finally, now some equities and corporate moves. Tesla's EU sales fell for a third straight month. I think they're now down to about 2% of the share, if I recall correctly, from a tweet I posted earlier. Japan's EV charging standard has become a sticking point in tariff talks. IBM beat profit expectations but flagged government cost cuts as a headwind. Southwest Airlines withdrew financial guidance. No one likes to see that.
A lot of
Potential.
turbulence going on there.
Oh, I was going to say potential rough landing, citing trade war volatility as the most severe disruption since COVID. ExxonMobil beat rival Occidental in securing lithium rights to a major US deposit. Nokia, are they still going? Warned of Q2 earnings drag from tariffs, but stuck to full-year forecasts. TSMC confirmed its 1.4 nanometer chip will enter production in 2028. Tesla, BYD, and Xiaomi adjusted strategies at the Shanghai Motor Show following a Beijing safety crackdown. And finally, from me, DeepSeek was flagged by South Korea's data authority for unauthorized data transfers. Pony.ai, obviously not made by a Londoner, said
That is
tariffs may.
not real. Sorry.
I swear
That
to God, it's called
cannot be true.
Pony AI.
Pony.ai.
Pony AI. Obviously, non-Londoners now are going, "What the fuck are they on about?" But yeah, I might start using Pony AI just for the sake of it now. Pony means shit for those that not aware. Pony AI said tariffs may slow global rollout, and that's it from me on that bombshell. Back to you in the studio.
Good God. This is why you need to ask actual English speakers before you brand your product.
What are you using? I'm using that Pony AI.
Yeah, to be honest, I've probably said that before, given my technological expertise.
This
Anyway,
AI's fucking pony.
moving on from our little Cockney slang there,
Sorry.
what's going on today? Well, at 9 o'clock this morning, in 8 minutes' time, we have the latest IFO sentiment surveys out of Germany. The business climate metric that's expected to fall to 85.2 from a prior 86.7. Of course, this is broadly in line with the ZEW surveys, where we had that big rise in sentiment in March as a result of the fiscal stimulus,
You
and
make
then
me
tariffs
rise.
came in April. Sorry, what was that?
Nothing. Move on.
Oh God, I'm not. I'm not even going to go there. And then, obviously, as we've come into April, tariffs have been imposed, and sentiment has subsequently fallen off a cliff. Moving into the remainder of the day in the US session at 1:30 this afternoon, we have March durable goods orders. Orders seem rising by 2% on the month compared to the 1% rise that we saw in Feb. Although, of course, do bear in mind that durable goods orders are skewed quite a lot by what's going on with Boeing, so that may impact the numbers somewhat. Also, at 1:30 this afternoon, we have the weekly jobless claims data out of the States. Initial claims, they are expected at 222,000 from a prior 215, while continuing claims in the week to the 12th of April, so coinciding with the April non-farm payroll survey week, they are expected at 1.863 million for a prior 1.885 million. We also get existing home sales data out of the States today. That comes at 3 o'clock this afternoon, London time, expected 4.13 million, down from a prior 4.26. In terms of other bits and bobs to keep an eye on today, we do have a 7-year auction out of the States, $44 billion worth at 6 o'clock this evening, wrapping up this week's Treasury supply. The central bank's speaking docket is busy once again, including the Fed's Kashkari, Wren, Lane, Simkus and Nagel from the ECB, as well as BOE Deputy Governor Claire Lombardelli. And it's another busy slate of corporate earnings as well. Before the market open, we hear from American Airlines and PepsiCo, among others. And then after the market close, we hear from chipmaker Intel, who of course were reportedly considering laying off 20% of their staff earlier on this week. And we also hear from Alphabet, aka Google, after the close as well. Options implying a move about 6% up or down in Google stock after the earnings report. And in terms of expectations, EPS is seen at $2.01 on quarterly revenue of 89.1 billion. And that, for the time being, is your lot from me.
Wonderful, my friend. Wonderful. Well, listeners, thank you so much. Michael, thank you so much. Hopefully we'll be here tomorrow, but I'm off for a call with HR, so wish me luck.
Oh
Listeners,
God.
thank you as always. Take care, keep it tight. Remember to factor in the fuckery, and we'll see you tomorrow. Goodbye.
Bye bye.